Yeah. So before then, I know some people do chat me. They're having um challenges and they are still finding it difficult to understand what is happening. So like I told them that yes, is if you are always coming to lectures to the meeting, you are always free to ask questions. But whenever we do the analysis and after the analysis, you watch the videos and there are some certain things you would like to ask, or if you're having any challenge at all based on what we analyzed, you can as well bring it up, then we'll tackle it. That's the way you learn. Or avoiding classes, not coming, being punctual to classes, you are already fading away because the knowledge you have will not take you to the next level. You always keep learning to be up in the market. You always keep learning. Even me personally, I'm still learning. I'm still learning from my mentor. I'm still learning. I'm still learning on YouTube. I'm still learning. So we keep learning. That's how we grow. Because when you stop learning, the knowledge you have is already a waste. The one you have that you have used is already a waste. So you keep learning to upgrade to the next level, right? So some people do come to my DMs and they chat me up and they ask some questions that they are supposed to ask in the meeting. And normally I don't attend to private message because this is uh, this is a free mentorship. It's a free mentorship. So it's only those that are subscribed to my mentorship that I attend to personally, right? So I don't attend to private messages normally, unless if you're a new person and you're trying to get your way, then I'll give you some guidelines. But after that, continuously testing me and trying to get some things, I don't really buy the idea unless you're my personal uh, mentee. So that is it. But regardless, if you have any question, I always tell them if you have any question, bring it up in our general meeting. We have our general meeting every Sunday for the advanced class. Bring it up, we'll tackle it. But aside from Sunday, anything, I'm not answering any questions on the private on my DMs. So that is it. So we'll have to do the top-down analysis. The top-down analysis. Mrs. Margaret, are you on your system? I would love you
Oh,
to.
I'm not on my system. Sorry, I didn't.
Okay, but probably next week. How is your schedule gonna be like? Because I want you to share your screen and at least do the top-down analysis. Let's see how your structure, your market is, and how you take your trade.
Okay. Next week I can do it. Next week I can do it.
Okay, that's fine. So
I'll be
it
home.
shows that you
Okay.
are you are following up in what you are doing. So
Okay.
aside from that, we have normally where we take trade, where we analyze, where we take our trade and where we analyze trade. And I believe that each and every one of us have set theirs like this, because I've taught this thing several times, and it's also in the on our YouTube channel. So if you have not done it, at least you can go and watch the videos and follow the procedures and do it. This way I will take trade like If you check from the is if you check from here, you see that there are lines that you've seen. These lines are called psychological lines. I've already thought about it. I've already explained this and how to go about it. So if you are not on track, just try as much as possible. Go watch the videos and um, be in line with what you are doing. It will help you to grow. It will help you to grow and keep track of your trade, and also document your trade. Not only that, you can go back to check your previous trade, what happened last year, what happened last 2 years, you know. So it's also part of back testing. So that is it. So we are going to be doing the top-down analysis today to see what is going to happen next week. Like I told you guys last week that the market is an uptrend. It has turned to uptrend. So what we'll be looking at is always a buying opportunity. Always a buying opportunity. That's what we'll be looking at. So I'll be taking this out. I'll take this line out. So we are always be looking at a buying opportunity, right? So that is it. This is the monthly. This is the monthly. So from the monthly, we do the monthly, weekly, daily, and stop at the 4 hours, or can still probably extend to the 1 hour. The last time we did, we stopped at 1 hour, but the market passed there. I want to see the system view, what I dropped. Not this. Okay, this was it. Can you guys see? Can you guys see? Can you see my screen?
Yeah, we can see.
Yes, sir.
Okay, this was our previous analysis, our last week analysis, right? And what happened last week? This is a clear view. We said that the market is going to get to the 46,200 range, which is the 50% fib level, then take us up. And if actually it breaks the trend line, come down to the 61% fib level, give us retracement, then we are taking it to the 100% fib level, right? This was our simple analysis. And what happened last week? What happened last week? Let's go down to what happened last week. So what happened is that this is where we drew our, I think, let me see. I want to get a clear view of what was saw there. No? Okay. From here, we draw a Fibonacci from here to this level. Okay, from the low to this level. Okay, to this line, this last resistance. I think it's from here. I think it's from here to here. Right? I hope I'm right. This place, because I want to get the exact the fib level of last week. from here to, okay, to this level, okay, the M level. This was we said.
But the numbers are not the same. I don't think that's the place.
The numbers are not the same.
No. Because the minus 27 is 46, 5.2.
46, we stopped, we
542.
took it to 46,400. That's where
46.
we dropped
Okay.
it at.
Okay.
46,
Let's see then.
46,400. This is where the market, this is where we took it,
Yeah. Yeah.
right?
So it's come
Yes.
down. Yeah. Yeah. Yeah.
Yes.
That's it. That's it.
Exactly. So this is where it is. Then we said that the market is going to touch the 50, and take us up. Then if this doesn't happen, we have two options. Take us here. This was the analysis, I think, right?
Yeah.
Okay. So at the opening of the market, 1 hour, go to 1 hour. This is where we take our trade from 1 hour. You see what happened. And also, please, if you are trading, if you are swing trading or US30, you don't need to wait for the section. Very, very important. I don't know. I've said this thing before because I noticed some of us sometimes you don't. The market will pass your entry level, and you enter where you're not supposed to enter, and the market will take you out. So if you are doing, unless you're not swinging, but if you are swinging, a trade, you take the trade from 1 hour. Immediately the market open and the market gets to the 50% fib level. You don't have anything, like you just have to wait for your entry if the market is good. But if you are busy, you can do a pending order. Once you do a pending order, but what you need to do is that your stop loss now will now be more, or will be up to, like, let's say 200 pips. Because why do I say 200 pips? So that even if the market decide to get to the 61% and create a wick, you will not still be locked out, right? Your stop loss will be here, or it's not even going to be out. You can even make it 150 to get this exact high. At least you are still you are still on profit. Once the market do 1:4, this is 1 hour. If it does 1:4, you are on massive profit. For the week, you are good to go, right? So what actually happened is that the market came here, created a wick. It touched this our 50%, created a wick, and start going up. Which, if you notice that, okay, this market has gotten this level, you enter, put your stop loss at this range, above or below the 61% fib level. Then you allow the market to run. You can even leave it till Friday. Only one trade alone is going to make you the money you want. Only one trade alone. You can leave it till Friday.
So,
And once it gets to your stop loss, at this place you can close.
hello.
Yeah, Bright, you want to say something?
So at this point, we'll not take profit. We'll not play the take profit.
Sorry, come again. I didn't hear you.
I said, please, at this time, you not play the take profit. When you want to leave it like that.
I don't understand your question.
You said when you are doing the penny order, you will place your stop loss, and I'm saying that this you will not play the take profit. You will leave it to run.
No, normally if you are doing a pending order, you have stop loss. That is the most important. That's the first thing you need to impute. Your stop loss
Yeah.
and your take profits. You can put take profits, but if you want, you can decide. But it's good to have your target. It's good to have target and the amount of money that you are targeting, the amount of profit that you are targeting. If you start from here, like let's say for instance, you enter this trade from here, your take profit should be here. This is another resistance because there is every tendency that the market is going to reverse when it comes here,
Yes.
right? There's every tendency that the market is going to reverse. And what happened? If you notice vividly well, what did the market do? The market got here, immediately got here, it reversed, touched here. I couldn't break it again, reversed again, touched the 38%. This is now when it pulled up, when Trump tweets. Do you get? So if this market,
Yes.
if you enter this market from 50%, you just pending order, put it, but let your stop loss be above 61. If you are working, let it be above 61 because most times the markets will get to 61 fib. But once the market gets to 61 and take you out, that means you are wrong. You're already wrong, right? But once it gets to 61% or 50%, it will definitely do what you asked it to do. The market will definitely do it, unless the market wants to change direction or wants to do whatever it wants to do. But based on our technical analysis and based on our confidence, the market should do as we said. But for you to be on a better position, let your stop loss be at the 61 if you are swinging below 61, so that it will not take you out, because sometimes US30 might just drag you, create a very long wick, enter the 61%, create a very long wick and come out again, like what happened here, like what happened at this place. If you move down to 5 minutes, you see. Can you guys see?
Yeah.
Can you guys see what happened?
Yes.
The market, the market got here, create a wick, immediately create a wick. This is 5 minutes. Create a wick and couldn't break this 51. Then it started going up. See, if you watch it, you see the way the market was creating higher highs and higher lows. It was just going up jejely. Which had they been, you enter this place, you have your stop loss here. There is no how the market will knock you out. There is no how. Unless you are wrong. You are totally wrong. Unless the market is invalid. Right? But in as much as you follow the confluence, you entered it like this, you are good to go. You allow it to run till Thursday. You see the kind of profits you make. And mind you, this my trade that I entered here is still running. The market I entered here, let me show you guys. I entered this trade here. I entered this trade at this level because I've been waiting for it for like months. I entered trade here. It's still running up till now. And I'm leaving it till December. I'm leaving it till December. I want it to come here, get to this level. Mind you, this is daily. I want it to get here. And when it gets here, there will be a retracement, a very big retracement, at least up to 500 to 1,000. You understand? And I'm expecting that it will break it. That is my expectation. Do you guys understand? So that is how this is a place that you can, if you can take trade here, you just go and sleep. If you can, if you didn't miss opportunity here, you take trade from here, you just go and sleep. Your money will just be counting, because there is no how the market will come and break here again. This is the highest the market can go. So this is how to trade. This is how to trade confidently, comfortably, without any emotional whatever. So that is it. So the market came here. The market came here and started consolidating, going up and down. But you know vividly well that yes, this is where you should take your profit. It's about 600 pips. 600 pips with 200 stop loss, 200 stop loss, pips stop loss is okay. At least you're on 400. That is how to trade confidently, comfortably, without stress. Right? So if you are working. So that is it for the last week analysis. So we are going to clean this, then do another analysis for next week, because the market has already gone up. So we're going to do another top-down analysis, right? So that is it. Erica, how is it going? How are you?
Fine.
Okay.
Just here.
How is everything now?
Just here. Just work.
Okay.
Same shit, different days. And you?
Yeah, that's good. So guys, you are going to be doing the top-down analysis. So if you are having any challenge when it comes to US30, because what you trade is only US30. If you are doing personally, you are doing any other thing aside from this, that means you are not with me, you are not with us. If you are trading other pair behind, you are just doing yourself, because what we are fighting is to become profitable. We are not fighting to be master of or master of none. So it's good you focus on one pair. Focus on one pair, become profitable on that pair. Then if you choose to diversify, you are good to go. One US30 can make you any amount of money you want. Any amount of money you want. US30 can give you that money. I didn't just start trading US30. I did my research. I did my research thoroughly for over 1 year before I get into this trade, into this pair. So if you are here, forget about other pairs. This one can give you anything you want. That lifestyle you want is going to give it to you. The only thing you need is consistency. The only thing you need is consistency, discipline. Finish. Consistency, discipline. You already have the confluences, and our confluences is working 100%. Or let's say it's not like nothing is 100% when it comes to trading. Let's say 98%. Our confluence is working 98%. It has been, I've tested it severally. It's working 98%. So other things now is now left emotion, psychology that you need to work on personally. This is what you need to work on yourself, because that's when those ones comes in. But if you follow the process, the confluences are working perfectly. I have tested it several times. So that is it. So if you are here, with us. That's the best advice I can give you. If you want to be in the game, focus only on one pair. Do your thing. If trading has not started becoming boring to you, that means you are still playing. It's a boring game. Those that are professional will tell you the bottom is where the money is. But if you want to be trading every day, definitely you'll be losing. Forget about anything signal group. All those people are just making money off of people. Nothing like signal. If you don't know it yourself, you don't know it. You can never be profitable. That's just the truth. Focus on yourself, work on yourself. If you want to be a trader, that's how to scale up. Then you scale up from there. And one day you can decide, okay, I want to start teaching people. I want to start helping people to grow. You can start up your own. You start teaching people. You help people's life. And they will not forget. Even those that will forget will still forget. But you started from somewhere. So that's my best advice for you guys. Okay. So let's we'll have less than 10 minutes. Let's do the top down. So from here, from the monthly, our monthly will go down to the weekly. So this is our high. I'm taking this as a high because this is the next target. This is the next target. This is our highest high currently. Last week high, last month high per se. Then this is a last month low, right? So we'll go down to the weekly. Go down to the weekly. Are you guys seeing my screen?
Yes.
Okay. Then on the market, the structure, if you are looking at it from this angle, you know that the market is going up, right? The market is going up. So, and the next target, our next target is here. So whatever the market is going to, we are now going to be looking for where to enter. So we'll move down to the weekly, to the daily, to see a clear view of the market. As you can see, the daily. Okay, nothing much is happening on the daily. Move down to the 4 hours because I want to get a clear view of the market. Then we'll take it up from there. So looking at it, you agree with me that this market, the next target is here. Then
Yes.
what are we going to do? We are going to bring down our trend line. The trend line has to connect multiple times, 2 or 3 multiple times before it becomes valid. If not, it's invalid. So this is our trend line. Sorry, this is our trend line. So what next, based on our confluences, are we looking at? Now from here, from where the market started, this low, this is the major support. This is our major support. Let's try from here with our Fibonacci to where the market is currently. Okay, once the market gets here, it breaks this level, the next target should be here, our 61%. The next target should be our 61%. Are we following?
Yeah.
The next target is our 61%. Right? So let's take this out. What we are now looking at is we want to get the recent move where the market is going to drop, then pull up from there. How do we get it? We'll now take our Fibonacci again. Who can tell me, who can identify the recent low from where the market push out? Let me even know if we have mastered this trade. Who can identify the recent low? Just identify the recent low for me, where I'm going to put my Fibonacci to get the next place we are expecting the market to drop to take us up. Just identify, if you can identify the place.
Is it the 46,500?
Yes.
Near
46,500.
that low? No, here. Yeah, there. Is it here?
Here. Here?
Yeah.
Okay. Yeah.
Yeah.
You're very correct. You're very correct.
Thank you.
Mrs. Margaret, you're very correct. Yeah. Shows that you understand what you're doing. So now
Thank
this is the recent low. This place is what engineered this high. This place is what engineered. This is where supporters are. Support. This is our recent support. This is our recent support. So this is what pulled this from here to here. Without this low, there won't be this high. Get it? Without this low here, there won't be this high. That is why whenever we are analyzing the market, we are looking at the recent low that generated the high, if that makes sense, right? So what we are going to do now, take our Fibonacci, drag it from there to the place where the market is currently, and the next target of the market, for us to get where we are going to be entering the market. That is why we are doing this, because this thing is it's just like mathematics. If you did maths, just like math, you are calculating. It's calculation where you enter, right? So now, what are we expecting? The market got here, started dropping. So we are expecting this market to get down to this 50 again, touch this trend line. There are so many things at that trend line. We have almost three of our confluences at this trend line. We have number one, we have the trend line, which is part of our confluence. Number two, we have the 50% fib level, which is our confluence. We have psychological level, which is our confluence again. So we already have three confluences here. And based on our confluences, our 7 confluences, we say that if we have at least 4 out of the 7, we'll enter the trade. If we have 4 out of the 7 confluence, we enter the trade. So what are we expecting? That the market should come back here again and take us up. This is the place that we are expecting it to come to. If it's not getting here, we are not doing anything. At least the market should get here before we can now confidently enter. Right? But if you enter here, anywhere here, you are wrong. Because the market has to retrace again, because if you watch at we are still looking at the structure. The one we are trading, we are still looking at the structure of the market. You see the structure. Higher high, higher low, higher high, higher low, higher high, higher low. This is what we'll be looking at. Like that, like that. This thing is the mother of technical. So we are still following the model of technical analysis. So this is our analysis. This is what we were expecting. Do we have any question? I'm going to drop it in the group. We don't have any other thing. Do you have any question? Any question, please?
No question.